Well, folks, the Arrogance is back. And normally when the Arrogance comes back, that is normally the worst time to be buying stocks, when everybody is arrogant and folks are wearing their to the moon shirts again and all this other crazy foolishness that we're starting to see. So in today's video, I am going to simply do one simple thing. I am going to bring you guys back down to earth. I'm not here to be a bull. I'm not here to be a bear. I'm not here to be biased. Now, I'll even admit to some of my mistakes, because some people have been at me in the comments like, oh, you tried to catch the bottom and blah, blah, blah. Well, let's bring that full surface. Two fronts, right? Should I have bought more when the S&P hit 3,700? Sure. Hindsight is 2020, right? But at the end of the day, to everybody saying that I missed the bottom, you're just downright wrong. Matter of fact, where's my phone? Let me get my phone. I bought stocks. I'm not going to say I bought at the bottom, but that was definitely a temporary bottom, and it wasn't on purpose. It's not like I just perfectly timed the market. But if you look, I have a video right here that says I finally bought some stocks today. I had spent several months being bearish. And then when the market got to a certain point, i.e. the S&P 500 hit 3,700, and I saw some stocks get to really cheap valuations, in my opinion, like Bank of America, like Facebook I bought at one point, Amazon, and then there's another stock. Disney. I pulled the trigger and I started buying. You can even see the proof in this video right here. The title is I finally bought some stocks today, new portfolio, which is the portfolio that I created called the Market Crash Portfolio. I didn't buy too much, but I did do some buying, and I'm up huge in all those positions. While we're on the subject of my portfolio, the Market Crash Portfolio is looking even better, as we just got news that Disney absolutely murdered earnings. As a matter of fact, Disney beat on the top and bottom line of their estimates, and they have raised prices for their ad-free subscription model. So what they've done now, matter of fact, I'm going to read it to you guys. It says right here, the cost of Disney Plus without ads will increase by $3 per month to $10.99 as of December 8th. That's what I'm talking about, baby. Come on, Disney. Milk that content. Milk that Star Wars. That's what I like. So you guys know Disney is obviously in my Market Crash portfolio. I'm up about 21%, something like that. I'm doing very well in that position. And on top of that, we have even more incredible news. Disney now officially has more subscribers than the almighty Netflix. That's right, folks. Netflix has officially been dethroned by Disney. Netflix across all of its streaming services. Let's go ahead and give the breakdown. ESPN Plus. Disney has 22.8 million subscribers, Hulu 46 million, Disney Plus 152.1 million, giving Disney a total of 221 million subscribers. Netflix is sitting at 220. Let's freaking go. What the crybabies got to say now? Oh, you're a terrible stock picker. Oh, Palantir, tattoo shift to the middle. You're an idiot. That goes blah, blah, blah. Disney mother. Shut your mouth. Put some respect on my name, boy. I told y'all that Disney is the company you're supposed to invest in. I told you. I freaking told you. Okay, let's just go ahead and get into this market stuff. And I'm going to be completely honest with you guys. It is so hard to not criticize me, Kevin, because in my personal opinion, when it comes to doing the dumbest things imaginable in the stock market, Kevin Paffrath, aka me, Kevin, is the king of doing that. Let me show you guys what he just tweeted. He tweeted, so far so good, over 26,000 shares of Tesla, and I am now 97% in the market, including my other favorites. Now, you can see right here, his other tweets say, we're going back to the moon, baby. This is it. And then he says, and I'm not leaving. So basically what he's saying on Twitter is he bought stocks. Oh my God, dude. Like I'm telling you guys, let's just break this down. Why would you buy stocks? The market is at a very strong resistance right now. Okay. Why would you buy stocks here? Why didn't you buy stocks when I bought stocks, which is when the S&P went to 3,700? That actually made more sense. Again, you can't time the market, and I didn't time the market because the market actually, the low ended up being 3,600. The S&P went to 3,600. I didn't quite catch the bottom, but I was able to buy some of my favorite stocks when the S&P, went to 3,700. The S&P rallies to 4,200, and now he's buying stocks. That makes no freaking sense, and now he's claiming that he is now 97% in the market, including his favorites. Why would you buy stocks right now? And let this be a lesson to you guys. This is why you should not listen to a word this guy says. This is why, in my opinion, this guy is a terrible investor. You do not buy when there's a bunch of euphoria and momentum and absolute foolishness. Now, I know what he's doing. He's trying to basically do the macroeconomics thing and say, oh, well, you know, because inflation is going down, or inflation is peaked. I'm sorry, that's the headline. Because inflation is peaked, it's safe to buy stocks now. That's what I think he's saying. I haven't watched all his videos, so I don't even know at this point. But I'm pretty sure that's what he means, because that's the main narrative out there. But he's absolutely 100% wrong. Inflation may have peaked, but it doesn't matter if we go several months down the line and inflation is still above 8%, which could very well happen. I think buying stocks here is stupid. It is idiotic. It is ridiculous. I wouldn't do it. I ain't bought nothing right here. I bought when the market was at 3,700. That's why I'm up huge right now. I would not be buying stocks right here. I think it makes absolutely no sense. Sure, the market can keep rallying. Sure, it can keep going up. Congratulations. But when it comes to investing, you have to remember one very key term, and that is capital preservation. You got to make sure you don't get your butt murder, she wrote, the same way that this guy got his butt murder, she wrote, when he sold all his stocks in January. I mean, come on, Kevin. Jesus Christ, dude. Okay, so now let's actually talk about what the Fed is saying, right? So Chicago Fed President Charles Evans said the Federal Reserve will probably continue raising interest rates into next year in order to bring down unacceptably high inflation. Says right here, Evans calls the inflation report positive, but still unacceptably high. I expect that we will be increasing rates for the rest of this year and into next year to make sure that inflation gets back to 2% objective. Now, it's extremely important for people to understand. I don't know where this whole the Fed's going to pivot narrative is coming from, but I personally feel like Jerome Powell has made it extremely clear that their number one main priority and goal is to bring inflation down to 2%. If the Fed pivots in September or after September, how are they going to get inflation down to 2%? Can somebody please explain that to me? And don't say, oh, they've already raised rates hiked rates enough in order to do it. No. No, they haven't. You know, I think we got a lot more pain coming, folks. I really do. Now, let me show you guys something else, okay? Wells Fargo came out and said, in our view, it will take several more soft inflation prints before the FOMC begins to feel confident that it is getting price pressures in check. At least a 50 basis point rate hike in September FOMC meeting remains the most likely outcome. Now, that actually is bullish. That's less than the 75, which some people might have thought were probably going to happen. But regardless, Wells Fargo did come out and say that they think that we need more CPI data prints before we can really determine what the Fed is going to do and if they're going to stop. And also, I think there's something that a lot of people are missing out on. We need to see what the PPI report says, because that's going to be extremely important. And that's another measure of inflation too. So we're not completely out of the woods yet. There's still another inflation report that we got coming up that we're going to be looking at closely. So anyway, I'm just saying, guys, I don't know, man. I'd probably pump the brakes and be very careful on buying at this point. I would be very, very careful with that. I don't think it's a smart idea, but I'd probably wait a little longer and actually pay attention to some of these news updates we got going on before you just start losing your mind, throwing money into the stock market like it's a goddamn casino beat, Kevin. But anyway, there you guys have it. That'll go ahead and conclude today's video. Thank you guys so much for watching. Feel free to like, share, and subscribe, and I'll see you guys in the next one.